electric disconnects. And so on the electrical disconnects, are we at like 100% that could be done internally versus no?
No.
About what percent are still old-fashioned ones?
I would probably say about 10 to 15% if I had to guess, maybe 20.
And maybe I'm asking the wrong thing, because of the ones that
That's
need to
of
be
the-
disconnected,
right. That's
is that,
of the
much-
ones that are getting disconnected.
Oh, 10 to 15 still
I
old?
would say, yeah.
Okay.
Any other questions for Lynn?
Yeah, on payments, is our utility or other utilities looking into Venmo payments at all? Or something like
Gosh, I
that, you
haven't
know?
heard that come up at any meetings at all.
You know, when you're talking about electronic payments and stuff, that what, 2/3, 63% are
Mhm.
received via online, got me thinking that, you know, so many people younger than I, you know, do a lot on Venmo or other, those type of apps.
I'll ask some other utilities, but I haven't heard that come
Okay.
up at any meetings that I've attended at all. So,
Okay.
have you, Jeff, at all?
No, I haven't heard
No,
anybody
neither.
using that yet.
So,
These folks haven't bought too many homes yet.
Haven't I?
They haven't bought too
But,
many homes.
well, you know, I think if they're getting a text, right? Oh, they're getting a text. Oh, yeah, I'm gonna get disconnected or whatever. Okay, I'll just on my phone transfer the money over. Done. You know, versus I'll try to remember to stop in at the office or you know, mail a check. What's mail? You know.
If there are no more questions for Lynn, can we move to the Director of Finance report?
Yeah, Jeff, your discussions with Wood Trust seemed very appropriate. But what about Prevail?
Prevail, we're FDIC covered.
Up to that amount?
Well, because it's that Cedars CD process where they'll farm out our investments to other banks.
Okay.
So we might have, say we've got $2 million there, they've got 8 banks that we've got $250,000 in.
Oh,
That
okay,
they're
I
doing
didn't
with
realize
that, so,
Okay.
yeah, so that's working okay. So really our only place where we're not FDIC covered other than LGIP is over at Wood Trust, so.
Okay, and what was the term you used for that?
Cedars,
Cedar.
it's like certificate, I forget what it stands for, but
Okay.
CDARS is kind of what the program is.
Thank you.
Sure.
Yeah, Fidelity uses that as well.
Yeah,
So they never keep more than
more than the 250.
250 in any one bank. On a particular account.
Yeah.
Any questions, any additional questions for Jeff? What does it look like in terms of improved interest revenue as we see some of these investments move up in percent?
I would say from where we were last year to where we are this year, it's probably gone from about $10,000 a month to just under $30,000 a month that we're getting in investment income. So definitely it's made quite a
Big deal.
Big deal. And these older investments that we've had that were locked in for a year or two are also rolling off at 1% to 2%.
How does that work?
How do you shut this up?
Use your hammer.
Well, I guess I'll ask Jeff then.
That was the next step.
Because I was gonna have one for Jim with, I don't know what page this is, but it's the charts for electric, you know, seeing the purchase power is up 25% in the last 2 years. Is there any indication of whether that's peaked or not?
That would be a gem question. I know, I just saw, you know, when we got the April power bill and it's still a big,
Is
a
it
big
still
cost
going
to it.
up?
It's staying high. It's not going down.
Staying high, okay.
I guess would be the
Okay.
answer I would have right now, but hopefully next month he can give you a little more perspective on that.
Any more questions for Jeff? Information systems report?
at, I don't have my terminology, but I was at a cybersecurity event, and they use this terminology that they recommended, where it's like, and my understanding was, it was a one-way read. They were contracting with an organization that, he was saying from a recovery perspective, that it couldn't be corrupted because of the way, and there was some term.
Immutable.
Yes, immutable?
It's immutable storage in the
Okay.
cloud, and what that means is we send our copy of the data back up. Once it's
Yeah.
made it to the other end, it's locked. You can't write over it, you can't change it, you can't erase it. It's locked in. We actually use that.
You do? Okay, all right. And how is that? Is that a weekly, daily, monthly? How is that?
We push it up daily.
Oh,
We
okay,
push the backup data daily,
Okay.
and it's locked for 7 days.
okay. So it's good to know for recovery.
Right.
Thank you.
We have no more questions for Matt? The Conservation Manager's report?
I didn't know that Theo Kaolin was still operating.
Yeah, they have been. They had some silica that they were dispersion, and then there was, I think, ND, until they shut down, coated paper was still using some talc, which they were dispersing there. Yeah, that's kind of close to my heart. I was involved in actually getting that established. That and minerals also. Both of those were vendors that we brought to town, and both are leaving town. Does minerals still, they're shut? Are they
Specialty
shut?
minerals?
Yes, they're not operating.
Yeah. Yeah, those were both, very much supported by Consolidated. Made it possible, profitable for them to be here.
And Link One Potato, is that the dog food? The dog food place?
I think so. Pretty
It
sure
is?
it is.
And that's what it is now?
On the west side.
Okay.
Yeah, the evaporation plant.
Yeah.
So if there are no more questions for Sean, who isn't here anyway, we move on. Electrical engineer report?
So Tyler, how old was that recloser?
The manufacturer date is 2009. And I actually just had the technician just came in this morning, and after troubleshooting that we found out that it needs a new actuator board, essentially what it's called. They said that should be less than 10 weeks for lead time on that, so that's our backup at the moment, so hopefully we can get it as soon as possible.
But it is repairable anyway.
Yep.
That's good.
Any other questions for Tyler?
Yeah, so the high pressure service pump that went out, have we ever had two go out at the same time? Has that ever happened?
Not that I know of.
Okay, so it's, the risk is minimal, would you?
Well, we have
say?
multiple clear wells. So this is one clear well with 2 pumps on it.
Okay.
And we also have another one for redundancy.
We have a few small pumps that are also up to the large ones.
There are no more questions for Tyler. Todd is not here either. Any questions that
Anybody can answer?
anybody can answer? Josh probably can answer something for Tyler.
So he's talking about becoming a non-DPUFLS utility entity.
Now, my question was, how do we gain that distinction to begin with?
I believe it was based on size and capability. You have to have the solid state relays to be part of that program, and I think we were just lucky enough to have them.
In other words, we were ahead of the game in getting the newer technology, and we fell into that category.
So a penalty for being ahead of the game?
Correct.
Great.
Because does that make shedding that easier?
Otherwise, they can't shed.
I-
They can only shed if you have those relays.
Oh, okay, all right, so we're sheddable.
We're sheddable.
Okay. And I think Jim went to sleep and hung up the phone.
Probably made it to his destination.
Okay. Yeah, was he still traveling?
Yes.
Any questions that should have been posed to Jim?
I don't know, Jeff, do you know if any of the staff's going to be listening on that virtual session June 1st, just to get acquainted with Summer Strand, that's the new commissioner on PSC?
I was planning to listen to that. I'm thinking Jen probably would too, just from being on the MEU board. I'm assuming he will too. I think it'll be
Yeah,
good.
I would hope that
Yeah.
there'd be someone involved with that.
Right.
Okay.
I guess the question I was going to ask Jim is, where did he end up on the board? Is he an officer?
He is an at-large director. He's kind of gone through the executive committee already. It's kind of been president, past president, gone through that piece, and now he's an at-large member at this point.
It's an important resource to the group.
Definitely.
Any questions on the review of accounts?
What is, and this is on page 1, disinfection byproduct evaluation?
So the state required us to have what they call a TTHM study to make sure, TTHMs is total trihallomethanes.
Okay.
It's where our chlorine combines with organic matter, and if it exceeds a certain level, it's dangerous to your health. So the state requires so often to do a study on that, and it was part of that.
It applies to your pool too. You need to test for that. Any other questions on the review of accounts?
What is the, that's probably for Sean, but SERA, Focus on Energy, SEERA.
Yep, that's the monthly. So on your bill, you have that commitment to community charge. Half goes to Focus on Energy, half goes to energy efficiency programs.
Okay.
So that's the piece. It's just the monthly remittance of everybody's bills that's going to Focus on Energy.
Oh, okay.
Why do we have a payment to Marshfield Utilities for energy services?
The low income, the
Energy assistance.
energy assistance inadvertently paid us for one of their customers, and we kind of worked it out that instead of having to return the check and waiting for another week to get the assistance, that we would take that payment and remit it to Marshfield on their behalf, so.
I thought that was kind of strange.
Yes, it was.
Anything else on review of accounts? If not, I would entertain a motion for adjournment.
So moved.
Do I have a second?
Second.
We are adjourned. And I would request approval, additions, or corrections to the minutes.
I move to approve the regular commission meeting minutes as written and place on file for the April 12th regular meeting.
I'll second.
A motion and a second. Any discussion? If not, we have a vote. All those in favor?
Aye.
Opposed? And motion on the special commission meeting held 19/2023.
I make a motion to approve the minutes from the April 19th meeting.
Do I have a second?
I'll second that.
Any discussion? All those in favor?
Aye.
Opposed? So we have an item, and that is the audit. And I see we have a distinguished guest.
We do. So Amber Danielski, she's a signing director with Clifton Larson Allen. She's been doing our audit for a number of years and has agreed to come today and just go through. Everyone should have a copy of the handout, kind of guide the discussion today. And with that, I'll kind of turn it over to Amber.
Good afternoon, everyone. I'm just going to go through this handout here. If there's questions on the financial statements, we can go through those at the end. Turning just past the first page to the summary, it's the audit results communications page on page 2. This summarizes a majority of the required communications that we're required to provide to the board as a result of our audit. First and foremost, the results of our audit was an unmodified opinion, which is quote unquote a clean opinion, which is what the commission strives for and what management strives for. The results of our testing resulted in no material misstatements that we found that weren't ultimately corrected or misleading footnote disclosures or anything of that nature. So that's how we were able to arrive at a clean opinion. We follow generally accepted auditing standards and governmental auditing standards. And under auditing standards, we do a risk-based audit. So we review what controls the entity has put in place over billings, receipts, deposits, or payroll, disbursements, all those items. And then from there, design our tests and focus on the areas where maybe controls might be a little less or just are more significant to the entity. And so as a result of all that testing, that's how we arrive at the clean opinion. In 2022, there was a new accounting rule that had to be implemented for the financial statements. It was GASB 87 for leases. As a result of this, the water utility had agreements that met all the rules to be required to be presented. So there were receivables of about $800,000 recorded on the financial statements it's basically the cell phone tower agreements. Those are long-term receivables. You will note that there will be a difference between what the financial statements show and what the PSC report shows because the PSC did not want the impact of GASB 87 reflected in its regulatory reporting. So it doesn't really impact too much because you only had receivables on it. If you would have had some payables, let's say you were significant payables, let's say you were leasing significant pieces of equipment or property, then that would have been a payable situation. There might have been a little bit more in terms of differences between the two reports. But since you only had on the receivable side, there really isn't much of an impact other than on the balance sheet. If you look at the PSC report, you're not going to see a lease receivable out there. So then every year we always talk about it. There's estimates that are included in your financial statements. You know, you think a truck is going to last 5 years, it lasts 8. Or the building lasts 50, it might last 40, it might last 80. So those are estimates built into the financial statements. The depreciation ones are usually set by the PSC, but again, that can all fluctuate depending on how each piece of equipment or each asset works. And then you also have your Wisconsin retirement and your OPEB life insurance type items that are estimates that can fluctuate from year to year depending on how, especially when you come to health insurance, how those rates get adjusted every year and just overall uses of the plan.
We have professional input on those, right? I mean, we don't do those estimates entirely on our own, right?
Correct. I mean, a lot of the capital assets and stuff does come from the PSC, and they'll say, you know, you get this percentage every year that you can use as depreciation expense. So they do that estimates for us.
Yeah.
A lot of times.
But the OPEB, same type of thing.
Same thing.
Yeah.
We get the OPEB report from Key Benefits does our OPEB report. So we put in some inputs. You know, we say what the interest rate, we're using the implicit interest rate, and from there they kind of come up with the numbers.
And obviously anything that would cause fluctuations could also be if all of a sudden you changed what people were allowed to use after retirement for health insurance or different things. That could also impact your estimates there for those post-employment benefits. One item that was a past adjustment this year was related to unrealized loss on investments. As we talked last year, the accounting rules want everything shown as at fair market value for your investments, but the PSC doesn't. It's again one of those differences where they just want to report it at cost. And as you've seen, the market has gone topsy-turvy, and so at the year end you had unrealized losses on your investments that on the financial statements would have been recorded, but they were basically in between two thresholds, so it doesn't get reported on your financial statements. It's just listed here that, hey, you probably could have recorded $100,000, $110,000 of unrealized loss in electric and water, and then, but now if you look at the statements today, your loss might not be that much, or you might be at a gain because obviously the market fluctuates daily. And then we had one audit adjustment related to Wisconsin retirement. Just the way that the actuarial numbers picked up on the template, we just adjusted for that. But overall, we did not identify any deficiencies in internal controls that we consider to be material weaknesses. Again, we don't look at your internal controls in a really high level, in-depth way to give an opinion on them, but from what we were able to see, we didn't see any significant deficiencies or material weaknesses in what you have set up for your internal controls.
Jeff, how do those overstated assets and revenue affect any rate review by the PSC?
The past adjustments on the investments do not, because the PSC does not want to see that mark-to-market adjustment that we would have had
So
on the
that's why
financial
we have the
statements.
differences shown between PSC accounting and
Right, and that's
GASB.
why we didn't show this one, because the
Okay.
PSC is not going to want to see that anyway, and, you know, even though we are accrual-based accounting, you know, for the PSC, it's more the regulatory accounting that we're more concerned about.
Okay,
So that's why we
thank you.
passed on that adjustment.
And then under government accounting auditing standards, we're required to look at compliance with laws and regulations on a sample basis, and what we looked at, we didn't have any concerns or compliance issues that we noted. Moving then to page 3, this is a summary of your electric utility operating income and operating expenses for the past 2 years. As you'll see, your operating revenues were just about $28.8 million in 2022 compared to just about $27 million in 21. The largest line item that caused that change was the power cost adjustment line. Obviously, as you know, those costs fluctuated a lot this past year, and then the impact was recovered through the rates. And so as you can see down under the operating expenses line, you'll see your power supply costs were $2.3 million or $20.3 million compared to just about $18 million. So that cost really hit there. Overall, your operating income was about $2 million compared to $3 million for electric the year before. Any questions on that page? Okay, then moving to the water utility operations. Your operating revenues basically stayed the same. There were some slight fluctuations between various classes or whatever, but basically about even compared to for the 2 years. Your operating expenses, though, did go up. You'll see on the sources supply line that was up about $400,000. There was the well cleaning that you have every couple of years that kind of caused that increase. But pretty much every category saw an increase in expenses over the year. So your total expenses were $4.3 million this year compared to $3.6 the year before, leading your operating income to only be about $1.2 million at the end of 2022. Any questions on the water utility?
Did some of that expense difference in the source of supply, does that also relate to the lining?
That was all capitalized.
That was all capitalized?
That was all capitalized. So this is all the well cleaning is the
It's just the,
difference.
yeah, okay.
Page 5 then shows your rate of return for both utilities over the past 5 years, and as you can see, there were some peaks in the middle of the year or middle of the 5 years, but now it's dropped down. And I know obviously you guys have been looking at rate cases and different things trying to figure that out, but just wanted to give a perspective for 5 years just so you can kind of see how things can fluctuate depending on operations and different things. Obviously, water's a little lower this year because of those wells, that well costs. Any questions on that before I discuss? The last thing I want to discuss is there's 2 new accounting rules that are coming up, and I just want the commission to be aware of them. So the first one then is GASB 96 subscription-based IT arrangements. So what this standard is about is when you're getting the right to use somebody else's software and directing how it gets used. So, and in long-term agreements. So this could be your accounting system. This could be if you have a long-term contract with Zoom, or if you have some sort of potentially like engineering software that maybe you're paying a long-term agreement for. Anything that's software related, we're recommending you work with your IT director, you come up with a list and you start reading the agreements and determine which ones are long-term. And do you,
How many years is that?
anything longer than one.
Oh, really? Okay.
Yep. And, if it's perpetual, like let's say, Office 365 stuff, you're just truly on a perpetual agreement, that one doesn't count because it's just, you can get out at any time if you really wanted to. But it's the ones that are 3 years, 5 years, and because obviously our world is run by software these days, that's why this accounting standard is coming into play. And basically, once you've identified which ones they are, they follow the same rules as leases. So what you would end up doing is if you found one that met the requirements, you would show a lease payable and then a right to use asset on your financial statements. I have yet to see any guidance from the PSC, but I'm going to assume that the PSC won't want it recorded just like they didn't want leases recorded. But again, if these are significant enough, your financial statements will have to show them. So.
And how big of a job is that for you to inventory the software? I mean, we've got several different software, but.
Yeah, but they're all major packages. and
Okay.
It's not as many as you would think.
Okay.
And they are over 1 year?
Well, the Microsoft agreement is a 3-year, but it renews annually. It's kind of different, so I'm not sure how they cover that one. The NISC software is an annual subscription, so I'm not sure how that's, and I would assume that's excluded.
Right. Our summer help this year is gonna do a lot of inventorying and getting the agreements and kind of putting everything together, so we've got it in one spot to
Off the
review.
top of my head, I can't really think of any that would count.
Well, that's software, but what about copy releases? How does that fit in?
That was actually addressed in 2022. They met all the requirements to be recorded, but because the dollar amount was so small, you didn't have to deal with it.
Okay.
Other municipalities where maybe their operations are smaller, they did have to pick that up.
Okay.
Or we had school district clients that did have to pick up their copy or leases and different things. It kind of just depends on how many you're leasing and what dollar amount and all those kind of different factors in there. But yeah, overall, our recommendation with the subscription-based stuff is come up with your list. Once you have your list, kind of just start segregating which ones are more than 1 year, which ones are less than 1 year. And then what we kind of are anticipating is there's probably a lot of agreements to read through, but not too many are going to actually have to be picked up and recorded. That's kind of what we're being told, but not as many people were early implementing this standard compared to the leases.
But once we have the inventory, it will be much easier to maintain.
Yeah,
Review.
I mean, we're pretty much set in the software that we use, so I don't see it changing.
Okay.
And then the next one on page 7, this one's 2 years out. This one goes into effect for 2024, and it's revisiting compensated absences, so accrued vacation, sick, comp time, that kind of stuff. It's trying to clarify what needs to be recorded and what shouldn't be recorded. This one's still pretty brand new. I haven't had a lot of time to research it. I don't think a lot of people have, because I think they first released it back in November or something. I have a hard time believing it's going to have a huge impact in changing what you've been recorded, but it's just something to be aware of, that you could need to just review your policies and figure out what really needs to be recorded and what doesn't need to be recorded. And those are the big things from GASB coming forward, and I guess at this time, I will open it up for any other questions.
On page 2, where you talk about fraud, collusion, forgery, intentional omissions, and so on, do you have specific recommendations for your clients to be able to control those?
Our recommendations is usually to periodically take the step back and do a risk assessment with it. Like review with, let's say, receipts. Review with the people that are handling the receipts to understand the process and make sure nothing's changed based on what your understanding is. And if the controls are set up pretty good, you know, that you have enough checks and balances in there, then you can just document that and move on. If you think that you could add a step here and it won't be too cost effective or too costly to implement another step because it would better your controls, then implement it, review it after like about 6 months, and if it is doing what you want, well then keep moving with it. If it's not doing what you want, go back to it. You know, it's kind of just more taking each part of your entity and reviewing periodically. 1 year maybe you do receipts, 1 year maybe you do payroll, 1 year maybe you do wire payments. You know, since more and more vendors and everything are being paid via wire. It's taking those different areas where you maybe haven't taken time to look at it in depth, or maybe personnel changed, or maybe the software changed, and it's time to just review what controls you have in place and just see if they're still working or still adequate enough, and interview everybody that works in those areas, because they'll know what's working and what's not working to help you know where to go from there.
Okay. Page 3, you said management has omitted the management's discussion and analysis. And I see this letter of April 12th from Jem and Jeff. That does not count toward that letter? What is it that you're looking for?
Management discussion and analysis is a handful of 3 to 5, 3 to 7 page supplement where you kind of dive more into the details in a summary fashion, though, yet just current operations. Like what you might see is a summary page on your operating revenues and expenses, and a summary page on your capital assets, and a summary page on your long-term debt. And then at the end, you can have a couple sentences about economic factors that are going to influence you in the next 2 to 3 years. It's not a lot of governments include it. It's one of those things that technically is required under GASB 34, but it's not, as this paragraph says, we don't necessarily consider it a big deal if you don't do it. I'd say less than 25% of my clients actually prepare the management discussion and analysis.
Okay, so this not critical, and what was submitted is not exactly what you're looking for. You're looking more at summary and projections, is what you're saying. Future?
Yeah, I mean, with the projections, you can only go so far. They kind of just want you to, I mean, what some people have described is what your unemployment rate is, or what's going on in this next 23-year budget, like if you did one for 23. It doesn't go very far out, basically within the next 18 months, but it's very summary, high-level discussions about operations. Just, it's more of a narrative format, I guess I would call it.
It's a good planning tool and reminder.
It's just like a summary of your financial statements is pretty much what it is, and kind of why the numbers are what they are. And I think if we had more consumers of our financial statements other than the 5 of you, and then it gets rolled up to the city's financial statement, it's just our standalone financial statement really is not used anywhere that the amount or the effort level it would take to do something like that is not really justified at this time.
Do other members of the commission have questions?
I thought it was a good audit and that summary was helpful. I don't have any further questions or comments.
But thank you for the heads up on the coming changes.
Right.
One of the questions that I had, is probably more for you, Jeff, is our materials that we cast off, old transformers, and perhaps old wire, that type of thing. How do we account for the value of those?
The value of the transformers that get discarded or salvaged go with the current cost, or the cost that they were when we purchased them. So we've got a list of all the transformers and what the costs were from the years they were purchased. So when they're retired, we take that amount off the books, and that's in the retirements when we look at our assets. Materials, supplies, those kind of get netted out against any adjustments when they do year-end inventory. A lot of times those happen hand in hand, so when they're counting inventory, they might come across something, okay, we haven't used this type of wire, or this piece of inventory in the last 3 years. We're not gonna carry this anymore as an inventory item, so that gets taken off the books at the same time.
What do we do if it has value? How do we account for the recovery aspect of that value?
Well, it's gonna be scrap, so it's gonna go to the recyclers for the metal in it. But then the financial statements is either gonna offset those expenses that go through the stores accounts that we have every year. And it's just gonna reduce those expenses that way, if there's scrap.
Because that could be significant with the price of copper.
Yeah, I think they've done a really good job in the last, probably since Josh has been foreman, to kind of button down a lot of the items that aren't used anymore, just to save space in the storeroom. If we're not gonna use them, let's not keep them, so a lot of those things have been already removed from the books.
Standardization helps, so Pat's been working on that for a long time with the specs, so that helps to get rid of the bad inventory.
Is there any value to those used transformers, or the ones that you don't use?
We sell them.
And they refurbish them, or what do they do with them?
I think they refurbish what they can, otherwise they take the copper out and scrap it out themselves. They gotta get rid of all the oil, and it's kind of a dirty business.
So, but we don't get charged for that, we get
Oh, we
something
get paid.
for it.
Yeah, we get paid.
Good.
In the past, there's been years where we've gotten charged for it, but.
Yeah, you turn in a PCV transformer, you're gonna pay. That'll offset your whole year's worth of scrap.
We don't have any more of those now?
I wouldn't say that.
You wish you could, right?
Yeah, we find a couple a year, I would say.
Okay,
Capacitors are really bad.
okay.
We record dividends from our distribution network investment, but I see we have Wood County telephone stock. Do we get any bloody dividends from that?
I think we get $200 a year.
$200,
from that.
okay.
Yeah,
So it gets lost in the chaff.
it does.
Okay.
Yes.
Okay. On page 20, it says the commission does not have an additional custodial credit policy. Is it something we should have?
It's up to you. I mean, state statutes tend to restrict what you can really keep stuff in. Otherwise, I mean, it comes down to, like, if you're purely just looking at your, regular checking and savings accounts, it's whether or not you can, if you want to spread it out amongst a few more local banks and offset with the FDIC coverage, or have you worked with your bank to get collateral at a decent fee that's not going to eat away all your interest income? It's kind of a balancing act, but not everybody has an extra policy that further defines more than just what the general statutes say.
I think those are pretty much my questions. So I guess on this pension liabilities, there was a huge apparent variation year to year. What's driving that? This is page 31.
It's going to be still just continued, I guess I would say, because the state's still just seeing positive investment returns, which is kind of offsetting any increased payouts on retirement or whatever. The Wisconsin retirement plan is 106% funded at the end of 21 compared to 105% funded at the end of 2020. So that 1% increase does end up swinging these numbers a little bit bigger than what anybody would expect. And they adjust their, the rates they charge you every year based on how much investment income they've gotten in versus how much did they pay out in retiree benefits. And as long as that rate of return is coming in better than what you're paying out, they're not going to change your contribution rate significantly. And then, so then you're going to see an increase in these values or your proportionate share of that asset at this time.
Like between 23 and 24, that's a huge difference.
Yeah, that's because I believe the last 2 years has had the most significant gains. And the way the accounting rules are is instead of recognizing the full gain in 1 year for the pension changes, they recognize it over 4. So then as the different years change, 1 year you have a larger number, next year you might have less, it's gonna change those amounts. And some years you'll have more and some years you'll have less. And then now when we see the state will release 22 numbers in October, so then we'll see what happens at that point and how it impacts those amounts.
Inactive employees or beneficiaries. We have 3. Page 34.
We do. They can, I mean, we pay for the 3 years of health insurance, which is the policy, but they can stay on, paying their 100% of what their rate is. There's an implicit rate when you do these things, just because the thought is they're getting a better deal being on our health plan than them going out and getting their own health plan. So we report to 3, but at the end of the year, we weren't paying any retiree monthly health insurance benefit. So even though there are those couple listed, they're not being paid for by the utility.
Okay. If there are no further questions, I would entertain a motion that we approve the 2022 audit as presented.
So moved.
I'll second that.
All those in favor?
Aye.
Aye.
Opposed?
Thank you.
Motion carried. Motion carried.
Thank you very much. That was a good.
Have a good afternoon.
Thank you.
Thanks for all your work, Jeff, and your team.
So, we have a safety committee report.
Like a good discussion on respirators and chlorine safety
Yeah, we beat it up pretty good. It was kind of nice to get some
feedback.
feedback and honestly, just challenging the norm.
Yeah.
So, I think we all actually found out some different stuff too, between our requirements. And that's usually not something on my scope. So yeah, it was actually really value added.
Okay, good.
No further discussion on the safety report? Line superintendent? It's like you had one of everything, huh?
Yeah. I don't think I've ever seen that before. No need to do a Pareto analysis on that.
Right. If there's no questions for Josh, Water Department operations? Nice recovery of the water, so the aquifer is replenished to a good extent. That's good. Okay. No questions for Adam?
So the hydrant upgrades, what's the average life of a hydrant?
It varies on the manufacturer. Some models don't last as long as others. I would say anything from 1970s and newer is not being replaced at this point, and then we'll run into, I would say 50 years.
50 years, yeah.
Is normal, so.
Depends when it gets hit.
Yeah.
The
I meant the
life-
non-hit
life
ones.
expect-
Right.
The life expectancy goes down when they're hit with a vehicle.
There are no further
I
questions?
do have a question. The hydrant you replaced on 16th and 2 Mile, was that part of the lining project, and is that just the bleeder? There's an out-of-tag service on one of those.
The out-of-take service is on the raw water run, one
Okay.
for flushing, so the
Yeah.
fire department doesn't flush it when we're not operating pumps,
Okay,
because it won't have any flow with them.
so it wasn't that hydrant?
No, the distribution one was across the corner, and that one was actually hit by a vehicle.
Okay.
Okay. There are no more questions for Adam, customer service, support supervisor?
That was really interesting information, that chart there, Lynn. I scratched my head in terms of why other utilities aren't utilizing those techniques on the disconnects.
Oh, yeah, it surprised me too.
Yeah.
Don't get any ideas.
Manitowoc, no, none. I mean,
Right? I was surprised.
Sun Prairie, 400,000 in arrears in one.
Yeah. They obviously aren't paying attention.
But even